This is not about luck, not about vibes or feelings or whatever slogan gets printed on coffee mugs today. This is about survival, disciplined survival, in the only arena where everyone thinks they're smarter than they are, the market. I've seen people build fortunes and burn them to ashes in the same year. The difference wasn't intelligence. It was obedience to rules, to structure, to self-control. So, if you're ready to hear what actually keeps you alive out there, listen carefully. Because these aren't theories. These are rules written with real losses. My own. Rule 1. The market is never wrong. The market does not have emotions. It doesn't love you, hate you, or care whether your analysis is due to be right. It's a mirror, one that reflects your biases with brutal honesty. Every losing trader I've ever met committed the same sin. They tried to prove the market wrong. They had logic, conviction, and confidence in abundance, everything but humility. They shorted what was rising. They bought what was sinking. And when it went deeper against them, they doubled down out of pride. I did it too, once. I watched a stock rise for weeks, screamed it's overbought, and bet against it. The price didn't hear me. It just kept climbing until it broke me. The market never punishes you because it's cruel. It punishes you because you refuse to listen. Accept this law early. Price is truth. Your opinion is noise. Your job is not to be right. Your job is to be on the right side. That's the first difference between a gambler and an operator. One wants to be proven right. The other wants to survive. Rule 2. Don't predict, react. Trading is a business of reaction, not prediction. Most traders lose because they want to feel like geniuses. They guess tops. They guess bottoms. They guess turning points. Guesswork is adrenaline disguised as strategy. But great traders, they don't guess. They listen. The market speaks through momentum, volume, and behavior. When price builds strength in one direction, it's telling you which side the real money is on. You can argue with it or follow it. Smart traders act like detectives, not prophets. They collect evidence until a pattern proves conviction. The lesson: don't ask what should happen. Watch what is happening. When the tape shows strength, follow strength. When weakness prevails, step aside or align with it. Stop trying to lead the market. Follow it until it stops leading you. Rule 3. Trade with confirmation, not hope. Hope is the most expensive emotion on Wall Street. The amateur enters a trade because they want something to happen. The professional enters because something has already happened that justifies action. I waited for confirmation, what I called pivotal points. These were moments when the market verified my idea, not when I hoped it might. You must have clear, mechanical confirmation before touching a buy or sell button. Volume surge at breakout levels. Higher lows before an uptrend. Failed rallies in a downtrend. That's confirmation. That's your green light. The impatient don't wait for clarity. They trade noise. And noise will bleed you slower than a knife, but just as deep. Rule 4. Position sizing is strategy. The size of your position should never exceed the size of your discipline. Most traders think position sizing is just a risk management checkbox. Wrong. It's a weapon. A strategy in itself. The mistake? Going all in too early. You want to test the waters, not cannonball into ice. Here's how professionals scale. Start small. If the trade moves in your favor and confirms strength, add. If it weakens, step back or cut. Only the market earns your size. Imagine you plan to buy 3,000 shares. Start with 1,000. Wait, observe. If it builds higher, add another 1,000. If it remains clean, take the final step. Never the reverse. You never add to losers only winners. That one habit can save your entire career. Rule 5. Protect capital, always. Your most important position is survival. The fastest way to kill a career isn't one big loss. It's 1,000 small ones ignored. Your first objective in this business isn't to make money. It's to keep it once you do. Think of capital as ammunition. Every bullet you waste on recklessness shortens your campaign. You don't need to fire often, you need to fire accurately. Set hard stops. Never move them, just a little lower. If you're wrong, admit it instantly. Don't negotiate with the market. It doesn't bargain. The trader who survives has a shot at fortune. The trader who hopes to recover rarely recovers at all. Rule 6. Exits matter more than entries. You make your money when you exit, not when you enter. Anyone can buy. Anyone can sell. But very few know when to stop. I've seen traders enter perfect positions, then lose everything because they didn't know when to leave. They got greedy. They wanted more. The result? Profits turned into smoke. A great exit doesn't need to be perfect, it just needs to be intentional. Signals of exit. Volume fading while price stalls. Sharp reversals after parabolic runs. Your own satisfaction threshold being met. And discipline overriding greed. Remember, a sold position is a protected gain. When in doubt, take partial profits, tighten stops, and let the rest follow structure. Never marry a trade. Divorce it cleanly when the market changes tone. Rule 7. Silence the noise. Opinions don't pay. Charts do. In my early years, my worst losses didn't come from the market. They came from people. Brokers, friends, journalists, everyone had a theory. Everyone had inside info. And like a fool, I listened. Then I watched my profits vanish, while others explained why they still believed in the trend that was bleeding. That's when I learned. No one's opinion will ever save you. Only your system will. You can't outsource conviction. Filter every piece of advice through the price itself. If the chart disagrees, ignore the words. Because the market doesn't reward who sounds smart. It rewards who acts smart. Rule 8. Control emotion. Command execution. The market punishes those who feel. It rewards those who execute. You will never eliminate emotion, but you can neutralize its influence. The key. Routines. If a trade hits your stop, exit immediately. If a signal forms, act not after a meeting with your feelings. Overthinking turns discipline into doubt. Fear, greed, ego. These are the 3 silent killers of traders. Fear keeps you out of good trades. Greed keeps you in bad ones. Ego convinces you the rules don't apply this time. Do you know how many fortunes I've seen destroyed by men trying to get it all back after a bad day? Too many. A professional never seeks revenge. He seeks clarity. Trading without emotional control is like flying blind in a storm. You might last a few minutes, but not long enough to land. Build structure that acts for you when your mind wants to sabotage you. Rule 9. Patience pays more than talent. The biggest profits come not from action, but from stillness. Every rookie confuses movement with progress. They want the thrill of constant trades, win or lose. They need to feel busy. But the money isn't made in the trading. It's made in the waiting. When a trade moves in your favor, your job becomes inaction. Sitting, holding, trusting the momentum until the market shows a reason to exit. Do you know how difficult that is for most people? They can't stand quiet profits. They need stimulation, so they sabotage their own edge. My greatest trades came from sitting through boredom. While others scalped pennies, I sat through dollars. There's a saying, patience is not passive, it's disciplined waiting. And patience, practiced long enough, becomes your sharpest weapon. Rule 10. Treat every loss as tuition. Losses aren't punishment. They're payment for education. Every trader pays tuition. Some pay it to universities. The rest pay it to the market. The difference between a professional and an amateur is how they treat losses. Amateurs deny them. They justify. They delete charts and move on, pretending it never happened. Professionals dissect them. After every loss, document it. What was your entry? Your plan? The violation? Did emotion interfere? Did confirmation fail? Be specific. Ruthless honesty is cheaper than another mistake. Because every unexamined loss is a seed waiting to sprout again. Rule 11. Build a system stronger than your feelings. Success isn't intuition. It's infrastructure. When I lost everything, I didn't rebuild with bigger bets. I rebuilt with better rules. Rules for entry. Rules for exits. Rules for size. Rules for when to stop trading entirely. Your system isn't about predicting the market. It's about protecting you from yourself. A mechanical system isn't robotic. It's freedom through structure. When you follow your process, your emotions shrink. When you wing it, your emotions dominate. I've met countless talented traders who could read charts beautifully and still failed. Not because their strategy was bad, but because it wasn't consistent. Consistency beats brilliance. Systems beat feelings. If your plan only works when you're in the zone, it's not a plan, it's luck. The goal is repeatability. Any fool can make money once. The operator makes it again and again because the method is stronger than the moment. Rule 12. Discipline over everything. Discipline is not an act, it's an identity. Every rule before this one confirmation, size, emotion, exits, becomes useless without discipline holding them together. I wish I could tell you discipline is natural. It's not. It's trained. Forged in losing streaks, late nights, and reflection. Discipline means doing the right thing when it's boring. Not moving stops. Not chasing missed trades. Not breaking your system because you feel certain. The irony of trading is this. Success doesn't come from what you add. It comes from what you resist. Resist impulse. Resist greed. Resist the temptation to be brilliant instead of consistent. There's a reason most traders fail. Discipline isn't glamorous. It doesn't feel good. It doesn't get applause. But it's the quiet engine that turns experience into mastery. Build discipline, and the market cannot break you. Lose it, and nothing will save you. Closing the operator's creed. You don't have to be the fastest. You don't have to be the smartest. You just have to last long enough to let consistency do its work. The day I stopped chasing perfection and started chasing structure, everything changed. I stopped needing to guess. I stopped needing to win every day. And I started to grow methodically, predictably, sustainably. You want to become an operator? Then remember this creed. The market is never wrong. You are not here to predict. You are here to act with confirmation. Protect your capital like oxygen. Build size through strength, not hope. Exit with intention, not emotion. Silence the outside world and listen to price. Wait longer than others are willing to. Learn from losses until they stop repeating. Build a system that outlives your moods. And above all, be disciplined when no one's watching. If you can do that, you'll last. And lasting, in this game, asterisk is times winning. So, before you chase the next trade, ask yourself one question. Am I following my rules or my feelings? Because in the end, it's not the market that decides your fate. It's your discipline.